Good everyone, welcome back to our next edition of Econ Talks. Gareth, we've just published the latest quarterly economic monitor looking at regional economies across the country. Suffice to say that economic crunch really is deepening and sort of broadening in a sense across the economy. Following the trends we've seen sort of throughout 2024, it is becoming much more difficult out there in the economy. I think it's interesting when we looked at some of the figures below the surface. You look at employment, sort of quite a key indicator at the moment. And you're seeing, pretty big declines or sort of declines just outright happening now at the moment. Tairāwhiti Gisborne seeing the largest, but a number of others across the country, generally in sort of the lower half of the North Island, and then a few at the ends of the South Island. Much stronger growth, though, and still positive growth, obviously coming through in the middle of the South Island, the likes of Canterbury and Otago recording quite strong jobs growth. Seems to be sort of a combination of the tourism sector still recovering fairly well, and that's certainly an Otago story that's been supporting things there. Now, you've also had a bit of a look at some of the other economic factors, and I know that we're sort of not picking a particularly good quarter for economic growth at the moment. What's driving that sort of economic tone currently?
Yeah, still that ongoing downturn in household spending that we've been grappling with as an economy, probably for the last 18 months, as the effects of those higher interest rates have come through, and also the other cost of living pressures on household budgets. And that's still impacting on economic activity generally, and in terms of employment specifically in some parts of the economy as well. We know that retail and hospitality, for example, the job numbers there have also been under pressure. We've also got weakness, of course, in government spending, which is flowing through in those sort of tight fiscal conditions. Obviously quite critical in terms of confidence and activity levels around the Wellington economy, but some of those effects also showing up in some of the other regions as well. And then you overlay that with, obviously, through many of the provincial areas, again, agricultural employment and employment in that sector has been on the way down as well, under quite a bit of pressure. And again, that reflects just what we've seen internationally in terms of weak demand conditions, particularly out of China, obviously, but of course the broader global economy is also struggling with the after effects of the sort of COVID stimulus and moving it back to more sustainable activity levels. So certainly through 2023, we saw downward pressure on those commodity prices for exporters. And while those have not, while they have started to pick up in some cases over the last 9 months or so, we know that still from a very low position. And farmers, of course, have been grappling with high cost levels, big cost increases through the last couple of years. So profitability still not particularly great across there as well. So that's flowing through not just to employment decisions, but also just general spending, both operating spending and capex through the agricultural sector. And so many of those sort of provincial areas feeling the pressures from those. And I think it's a case when we look at broader economic growth, those factors are spreading across the country. Different ones are more important in different parts of the country, but it is sort of weighing on economic growth right across New Zealand.
Definitely, and I mean, we're picking a 0.2% fall over the last year in terms of economic activity, so that contraction very much coming through. You look at manufacturing activity as well, quite a substantial expected fall there, just again, demand not there, but either domestically or internationally a little bit around some of those things. So that's making it tougher. I think long story short, you are seeing sort of the hit coming forward a lot quicker to the private sector rather than the sort of, other more sort of public funded parts of the economy. So the likes of your construction is down, manufacturing's down, tourism activity is struggling, retail was down, professional services seeing a fall in employment as well. The areas that are still growing, the likes of health and education, more because there has been substantial population growth in previous times, that all requires sort of more people out the other end. I guess, look, there's a feeling that maybe there are some of those greener shoots to come. Interest rates are starting to drop. The official cash rate has been cut by the Reserve Bank. But surely there's still a bit of pain to come before we start to get to those greener shoots.
Yeah, I think that's fair. I mean, there has been good news over the last couple of weeks for households as interest rates have started to come down with the Reserve Bank cutting, and that momentum we're expecting to continue through the next 12 to 18 months as well. But you've got to remember it does take time for people to roll off fixed rates and have them up for renewal at lower rates. So it's not going to immediately impact on their budgets. And I think particularly at the consumer level, the softer labour market is still going to weigh on people's spending decisions some time as well. So you're right, there's green shoots, there's a few positives. You talk about tourism as being one of those as well. But I don't think we're necessarily going to see a rapid turnaround in the economy. You know, we're talking out into 2025, maybe around about the middle of the year before you start to see a bit more consistent positive momentum in some of those growth indicators across the board.
Definitely, and I think it's one of those things where we are seeing all of those sort of trends rolling in very different ways. You have seen stronger jobs growth coming through in metro areas over the last year. Rural areas having seen the slowest jobs growth, provincial areas sort of a bit more in the middle. So very much depends on where you are, what industry you're in, and what the outlook and how it's changing for you, because it is quite different sort of sector by sector, industry by industry. We'll assess how all of those go, how different regions perform, and what's driving that as we move forward through 2024 and into hopefully those greener shoots in 2025 on one of our future editions of Econ Talks.